I've always said that the game of trading is not so much about the market as it is about the man who trades it. The ticker will tell you what's happening. The charts will whisper the story. But it's the trader's mind that decides whether those whispers turn into profit or ruin. And that's what most people don't understand. They think winning trades come from some magic formula, some secret piece of news, some inside tip. But let me ask you something, if it were that easy, don't you think everyone would already be rich? No, the truth is simpler and harder at the same time. Winning trades are the product of discipline, patience, and an iron control over your own impulses. That's the psychology of it. You see, every man is beaten in this game. Every man. But not every man learns. And if you don't learn, the market will teach you again, and the tuition gets more expensive each time. Haven't you noticed how the market has a way of punishing the careless? When I was young, standing in the bucket shops, chalk in hand, I didn't know much about fundamentals or earnings. What I knew was price. The tape was enough for me. Price tells you everything you need to know if you've got the patience to listen. Most traders don't. They want excitement, they want action, they want to be right now, but the tape doesn't care about your feelings. The tape rewards the man who waits until the odds are stacked in his favor. How many of you actually wait? A winning trade doesn't begin when you buy the stock or when you short it. It begins the moment you decide that you're going to wait for the right conditions. Most traders lose not because they don't have ideas, but because they can't sit still. They see a little wiggle on the chart and they jump in, only to be shaken out by the very noise they mistook for opportunity. Haven't you felt that impulse, that urge to do something just because the market is moving? That urge is your enemy. I've always said that the big money is not in the buying or the selling, it's in the sitting. And that's not just a phrase, it's the truth. I've watched fortunes built by waiting, and I've seen them destroyed by impatience. A man can be right and still lose money if he doesn't have the fortitude to hold his position. Do you know what it takes to hold when the whole world seems to be against you? That's where psychology comes in. You see, the market plays with your emotions. Fear when you're losing, greed when you're winning, doubt when you're uncertain, and each of those emotions whispers the wrong move in your ear. Fear tells you to sell too soon. Greed tells you to hang on too long. Doubt tells you to stay out when you should be in. If you follow those voices, you'll end up broke. The only voice you should follow is the market itself. But how many of you truly listen to it instead of your own hopes? A chart is nothing more than a history of human nature. Every tick, every bar, every wave of buying and selling, it's just people acting on their emotions. That's why patterns repeat. Human nature doesn't change. When prices break through resistance, that's not magic. That's fear turning into greed. When prices collapse through support, that's not mystery. That's greed collapsing into fear. Do you read your charts with that in mind, or do you still think of them as just lines on paper? A winning trader understands that charts are portraits of crowd psychology, and the winning trader also knows that his own psychology must not be part of the crowd. You cannot follow the crowd and beat the crowd. You must think differently. You must act differently. And most importantly, you must learn to do nothing when there's nothing to do. That's the hardest lesson of all. Have you mastered the art of doing nothing? Now, let's talk about something most traders don't want to admit: the desire to always be in the market. They hate to be out. They feel like they're missing something. They can't bear the thought that money might be made without them. But let me ask you, do you make money by trading or by waiting for the right trade? The man who trades every day, who feels he must always be involved, is the man who pays the market instead of getting paid by it. The winning trader chooses his spots carefully, like a hunter waiting for his prey. Every winning trade is built on preparation. The setup comes first. You study the chart, you see the trend, you mark the levels. You let the market tell you where the line of least resistance lies. And when the market confirms it, that's when you act. But here's where psychology steps in again. Do you have the courage to wait for that confirmation? Or do you jump ahead, afraid that you might miss the move. That little fear of missing out, that's the ruin of many traders. I remember sitting through days, sometimes weeks, waiting for the market to show me the right signal. People around me thought I was lazy, thought I was missing out, but when the signal came and I pounced, that's when I made my money. Do you know why most men lose? Because they won't wait. They won't sit with cash in their pocket until the market begs them to act. They think cash is burning a hole in their pocket. But cash is a position too. Do you treat it that way? There's another side to psychology, the way you think about losses. Every trader takes losses. Every single one. The difference is in how you handle them. The loser denies them, hides from them, or worse, doubles down on them. The winner accepts them, cuts them quickly, and moves on. Do you cut your losses without hesitation? Or do you wait, hoping the market will come back and prove you right? That hope, my friend, is poison. I can tell you from hard experience that the market doesn't care about your hope. It doesn't care about your opinion. It doesn't care about you at all. The only thing that matters is the line of least resistance. And when that line turns against you, you must get out. No questions, no second guessing, no pride. Just out. That's psychology, to the ability to put aside your ego and obey the market. How many traders do you know who can do that? Let me tell you something, your biggest enemy is not the market, not the ticker, not the other traders. Your biggest enemy is yourself. It's your fear, your greed, your impatience, your vanity. Until you master yourself, you cannot master this game. You might win a few trades here and there, but you'll give it all back, and then some. Haven't you seen traders who make a fortune one year and are broke the next? That's not bad luck, that's bad psychology. The psychology of winning trades is not about being fearless. Fear has its place. Fear keeps you from taking reckless risks. The real secret is to control fear, not eliminate it. And the same with greed. Greed will whisper in your ear, just a little more. But if you let it run wild, it will turn your winner into a loser. You need the discipline to take your profit when the market shows signs of exhaustion. Do you recognize those signs, or do you let greed blind you? Another thing I'll tell you, never argue with the market. I've seen men who were dead right on the fundamentals and dead broke on their positions. The market doesn't care if you're right. The market only pays you when you're on the right side of the trend. That's why I say don't tell the market what to do. Let the market tell you what to do. That's psychology, to the humility to follow instead of trying to lead. Can you humble yourself to the market? You must also learn to think in terms of probabilities, not certainties. No trade is guaranteed. You can have the best setup in the world, and it can still fail. That's why you must control your risk. Risk control is not just mathematics, it's psychology. Can you accept that you might be wrong? Can you size your position so that being wrong doesn't ruin you? A winning trader always thinks in terms of survival first, profit second. Do you? The stock market is the greatest teacher of human nature. It exposes your weaknesses, magnifies your flaws, and punishes your mistakes. But if you learn from it, if you treat each loss as tuition, you can become stronger. I lost many times before I learned to win. But each loss taught me something about the market and about myself. Are you willing to learn from your losses, or do you make excuses? Now let's touch on wealth building, because winning trades are only part of the picture. A man who makes money in the market but can't hold on to it is no better off than the man who never made it at all. That's why I always say don't just think about making money, think about keeping it. Wealth is built not on one big win, but on many small wins, compounded over time. Do you think like a builder, or do you think like a gambler? The gambler looks for excitement. He chases tips, rumors, and hunches. He wants quick riches, but the builder is patient. He builds position by position, trade by trade. He doesn't risk it all on one throw of the dice. He thinks about preservation before expansion. That's the psychology of wealth in trading: steady, methodical, disciplined. Which one are you, the gambler or the builder? Remember this, the market is not your friend. It is not your enemy either. It is simply a mirror. It reflects back to you who you are. If you're reckless, the market will punish you. If you're disciplined, the market will reward you. The psychology of winning trades begins with knowing yourself. Do you know yourself well enough to stand against your own impulses? Never argue with the market. That is one of the hardest lessons for a trader to truly learn, and yet it is the most essential. The market is not something you debate with, not something you try to correct, not something you attempt to prove wrong. The market is always right, not because it possesses some moral authority, but because its verdict is the only verdict that matters. The price is the fact. Everything else is just an opinion. Have you ever noticed how a man will cling to his opinion, defend it fiercely, even as the tape proves him wrong? That is pride at work, and pride has no place in trading. I have seen men with brilliant minds, men who studied every figure, every report, every balance sheet, go broke simply because they refused to admit that the market disagreed with them. They argued with the ticker, as if their analysis or their intelligence could force the market to behave differently. But tell me, have you ever once seen the market change course because you wished it would? The market doesn't bend to anyone's will. It does what it does, and it is the trader's job to adapt, not to resist. That's where psychology comes in. Most people cannot bear to be wrong. They take it personally. Their ego is tied up in their opinions. When the market moves against them, they say, "It will come back. It has to. I know I'm right." But the market doesn't have to do anything for you. It doesn't care what you think, or how long you've held, or how convinced you are. And yet, how many times have you seen traders sit stubbornly, watching their account bleed, because they couldn't bear to admit defeat? Isn't that just arguing with reality? When you argue with the market, you are arguing with the truth. The price is reality. It may not align with your opinion. It may not fit your analysis, but it is the truth in that moment. You can protest, you can complain, you can insist that the price should be something else, but all that does is drain your account. Do you want to be right, or do you want to make money? Because those are not always the same thing. I learned this lesson the hard way, just like most traders do. I remember being sure of a stock once. I studied it. I watched the pattern. I thought I saw everything lining up perfectly. I took my position, and then the market started drifting the other way. At first I told myself it was temporary, just noise. I added a little more to prove my conviction. But the tape kept disagreeing with me, and what did I do? I argued. I told myself, it can't go any lower. It's undervalued. People are wrong. Yet every day the price marked me down, and every day my stubbornness cost me more. Have you ever been there? Holding on simply because you didn't want to admit the market was against you. The cure for that is humility. Humility to say, the market knows more than I do. The market is never wrong. My job is not to fight it, but to follow it. And that's not easy for most men, because most men want to be right. They want to prove themselves smarter than the crowd. They want to say, I called it. But this business is not about pride. It is about survival. And survival depends on obeying the market, not battling it. Can you humble yourself enough to obey the price instead of your own ego? Let me tell you something that may sting. The market does not reward stubbornness. It rewards flexibility. The trader who can change his mind quickly, who can cut a loss without hesitation, who can flip his position when the evidence demands it. The trader has a chance to win. But the one who insists on being right, who digs in his heels, who fights the tide that man is already beaten, even if he doesn't know it yet. Isn't it better to be flexible and alive than stubborn and broke? There is an old saying that the market can stay irrational longer than you can stay solvent. That's another way of saying don't argue. You may think you see logic. You may think you see value. You may think you know what should happen. But the market doesn't run on your logic. It runs on supply and demand, on fear and greed, on forces larger than you or I can control. And if you're on the wrong side of that force, no amount of reasoning will save you. The tape doesn't care about your logic. Do you see why it's foolish to fight it? The psychology of not arguing with the market is about surrender, but not in a weak way. It is about surrendering your ego, your need to be right, your desire to control what cannot be controlled. It is about aligning yourself with reality instead of resisting it. Most traders cannot do that. They cling to their opinions as if those opinions were lifeboats. But in truth, those opinions are anchors dragging them down. Have you ever mistaken an anchor for a lifeboat? Think of it this way. When the market shows you a direction, it is giving you information. That information is priceless. If the price action tells you that your opinion is wrong, why wouldn't you want to know that as soon as possible? Why would you delay? Why would you resist? Why would you argue? When the very thing you're seeking the truth of where the stock is going is right there, in front of you. Doesn't it make more sense to accept it immediately instead of fighting it? The great paradox of trading is that the more you try to control the market, the more it controls you. The more you insist on being right, the more you are punished. But when you let go of control, when you let go of the need to be right, when you simply follow what the tape is telling you, that's when you find freedom. That's when the profits come. That's when you finally get out of your own way. Isn't that ironic that surrender leads to mastery? I can't count how many times I've watched traders blow up because they argued. They had every chance to get out. The market whispered to them with small losses, then spoke louder with bigger losses, and finally screamed with ruin. But they wouldn't listen, because listening meant admitting they were wrong, and some men would rather go broke than admit that. Have you ever seen that in yourself, that voice that says, "Hold on, just a little longer, you'll be proven right"? The truth is, the market doesn't prove anyone right. It doesn't hand out medals. It only pays or doesn't pay, and that's why the psychology of not arguing is really the psychology of survival. If you can cut your losses quickly, without debate, without hesitation, you preserve your capital. You keep your powder dry. You live to trade another day. If you argue, if you fight, if you refuse to accept what the price is telling you, you will lose not just money but opportunity. Isn't it better to take a small, clean loss and be ready for the next chance than to sink with the ship of your own opinion? The habit of not arguing must be built like a muscle. You have to train yourself. At first it feels unnatural, even painful, to admit you're wrong and exit. Your pride will protest. Your ego will scream. But with time, you come to see that cutting a loss is not admitting defeat, it is protecting your future. Each time you act quickly, without debate, you reinforce the discipline, and that discipline becomes your greatest ally. Have you built that muscle, or are you still listening to the voice that tells you to wait and hope? Never forget this. The market is impersonal. It does not punish you because it dislikes you. It does not reward you because it admires you. It is simply the sum of all forces at work. To argue with it is as senseless as arguing with the tide. The tide comes in, the tide goes out. You don't shout at it, you don't demand it behave differently, you adjust. You adapt, you move with it. Why should the market be any different? The trader who learns to never argue with the market becomes free. Free from ego, free from pride, free from the heavy burden of being right. He no longer needs to win arguments. He only needs to win trades, and those trades come from listening, from obeying, from flowing with the current instead of against it. Have you felt that freedom yet? The freedom that comes when you finally stop resisting and start accepting. Trade only when the odds are in your favor. Do nothing when they are not. That is one of the simplest rules you'll ever hear in this business, and yet it is one of the hardest for most men to follow. Everyone wants to trade, everyone wants to be in the action, but very few have the discipline to sit still. The market does not pay you for activity, it pays you for correctness, and correctness comes only when the probabilities tilt toward your side. But tell me honestly, how often do you wait for that tilt, and how often do you jump just because you can't stand the idea of not being in the game? When I started as a boy in the bucket shops, I thought every move was an opportunity. The tape would flutter and I'd jump in. Sometimes I made money, more often I didn't. Over time, I realized that most moves are noise, meaningless jiggles that only serve to tempt the impatient. The real moves, the ones that pay, come when conditions align, and those conditions don't appear every day. Can you sit and watch without acting, Or do you need the thrill of constant engagement? That's the dividing line between a gambler and a trader. You see, the market has a line of least resistance. The job of the trader is to discover it and align with it. But that line is not always obvious, and it does not always exist in a way that offers good odds. There are periods when the market is confused, when supply and demand wrestle without clear advantage. To trade during such times is to flip a coin, and coin flipping may be fun for a gambler, but for a trader it is suicide. Why risk your money when the edge is not there? Isn't it better to keep your capital intact until the game tilts in your direction? The psychology behind waiting is harder than most people think. Sitting out feels like missing out. You see prices moving, you imagine profits slipping away, and it eats at you. But have you noticed how often those moves you felt desperate to join end up reversing, trapping all the anxious traders who couldn't resist? The market is cruel to impatience. It teases, it lures, and then it punishes. The patient trader, the one who waits until the odds are favorable, sidesteps all that noise. He doesn't pay tuition to the market when there is nothing to learn. Do you have the patience to avoid paying for lessons you don't need? The odds tilt in your favor when certain elements align. First, there is the trend. Never argue with the trend. If the major direction is up, then you look for long entries. If the major direction is down, you look for shorts. To fight the trend is to fight the tide. Why strain against the current when you can let it carry you? The second element is timing. Even in a strong trend, there are points where the risk is small and the potential reward is large. Those are your opportunities. But they don't appear every hour. They appear when the chart tells you they do. Do you recognize them, or do you force trades where none exist? I've often said that the big money is not made by being active, but by being right. And being right means waiting until the probabilities are in your favor. You wouldn't bet heavily at a poker table unless you held a strong hand. Why then do traders bet heavily when their hand is weak? It's the same impulse impatience, greed, the desire for action. But the professional knows that his job is not to play every hand, but to wait for the fat pitch. And when that pitch comes, he swings hard. How many times have you wasted capital on weak setups, leaving yourself empty when the real opportunity arrived? Doing nothing is an art. It is not laziness. It is discipline. It is sitting with cash in your pocket while others chase shadows. And that cash position is not a failure, it is strength. Cash is a position. Cash means flexibility. Cash means you can act decisively when the odds shift. But most traders hate holding cash. They feel like it's wasted, like it's idle. Do you see the irony? They would rather risk losing it on poor trades than keep it safe for great ones. That is the psychology that ruins accounts. The great opportunities in the market do not come every day, nor every week. Sometimes they take months to build. A base forming on a chart, a trend gathering steam, a breakout preparing, it all takes time. And when the moment finally comes, it comes with force. That's when the odds tilt. That's when the patient trader strikes. And that strike pays for all the days of waiting. Do you measure your success by the number of trades you take, or by the quality of the trades you choose? That measure makes all the difference. The truth is, you must accept boredom if you want to be successful. The waiting, the watching, the restraint, those are the marks of the professional. The amateur needs stimulation. He trades for excitement, and the market punishes him. The professional trades for profit, and he endures the boredom gladly because he knows what is at stake. The psychology of waiting for favorable odds is not glamorous, but it is essential. Can you handle the boredom, or do you still crave the thrill of constant action? Every losing streak I've ever seen in my own life, and in others, has come from forcing trades. From acting when the odds were not there. From mistaking activity for opportunity. From believing that you must always be doing something. The truth is, sometimes the best action is inaction. Sometimes the best trade is no trade. Sometimes the hardest work you do as a trader is sitting on your hands. Have you practiced that kind of work, or do you still think trading means constant motion? Now, let's talk about probabilities. No setup is ever certain. You can never eliminate risk. What you seek is not certainty, but favorable odds. You look for situations where the potential gain far outweighs the potential loss, where the trend is in your favor, the timing is ripe, and the risk is small. That's when you strike, and even then, you may be wrong. But if you take only those trades where the odds are strong, you can be wrong many times and still come out ahead. Isn't that the whole game, to put the probabilities on your side? The market tempts you to trade when you shouldn't. It whispers, "Look at this move. You're missing it. Jump in." But if you look closely, most of those whispers lead to traps. The breakout that isn't real, the reversal that fades, the spike that collapses, those are the tricks of the market, designed to rob the impatient. The winning trader ignores those whispers. He waits for confirmation. He waits for proof. He doesn't gamble. He wagers only when the scales tilt, and because of that, his losses are small, his wins are large. Isn't that the kind of record you'd prefer? Consider the difference between the man who trades every day and the man who trades only when the odds favor him. The first man has constant activity, constant commissions, constant stress. His capital is nibbled away. His emotions are worn thin. The second man may sit idle for days, weeks even, but when he strikes hard. His capital is preserved, his mind is clear, his profits accumulate. Which man would you rather be? This is not just about money, it is about mindset. To wait for favorable odds requires control over your own impulses. It requires that you silence the voice that says, "Do something." It requires that you trust your preparation, your analysis, your discipline. It requires that you be content to sit with nothing, knowing that something is coming. That kind of control is rare. Most men are slaves to their impulses. Are you strong enough to master yours? I can tell you this, the market will always offer you trades. It will wave them in your face every day. But most of them are traps. Most of them are noise. Most of them are nothing. If you chase them, you'll end up empty. If you wait, truly wait, for the ones where the odds are clearly in your favor, you'll find that those few trades are all you need. A handful of good trades a year can make your fortune. But only if you have the psychology to do nothing in between. Have you reached that level of patience yet? Risk control is psychology, and practice survival comes before profit. That is a truth many traders nod their heads to, but very few live by. Everyone comes into the market with dreams of profit, of wealth, of catching the big move. But very few stop to consider that the first goal is not to make money. It is to stay in the game long enough to make money. You cannot profit if you have no capital. You cannot catch the big move if you are already wiped out. Isn't it strange how so many traders talk about winning trades, but so few talk about surviving the losing ones? The essence of risk control is simple, but the practice is hard. You must learn to accept that being wrong is part of the game. You must learn to cut your losses while they are small, not when they've grown too large to bear. You must size your position so that no single trade can cripple you. All of this is psychology. It is not about charts, not about formulas, not about news, it is about your mind. Can you bring yourself to take a small loss without hesitation, or do you hold on, hoping the market will prove you right? That hesitation, that pride, is where traders meet their ruin. I have watched men who were brilliant analysts fail because they had no discipline with risk. They could read the tape, they could call the turns, but when the market went against them, they froze. They refused to take the loss, and soon the loss took them. They told themselves it will come back. But markets do not owe you a comeback. The price is reality, and if you are on the wrong side of it, every moment you hesitate costs you. How many times have you let a small loss grow into something monstrous because you simply could not bring yourself to act? The psychology of risk control is about humility. You must admit that you can be wrong. You must admit that your opinion, no matter how strong, does not control the market. You must admit that survival is more important than pride. Most traders cannot do this. They want to be right more than they want to make money. And so, when the market disagrees, they fight, they argue, they double down. But tell me, what good is being right if your account is empty? Isn't survival the only proof that matters? Proper risk control begins with position sizing. Too many traders bet too much on a single trade, convinced it is a sure thing. There are no sure things. The only certainty is uncertainty. That's why you must size your trades so that even if you are dead wrong, the loss is manageable. Think of it as paying tuition small, affordable tuition that buys you another lesson and another chance. But most traders don't think that way. They want to bet big, win big, prove themselves. And when the market teaches them a lesson, the tuition is their entire account. Have you ever bet too big because you felt sure, only to watch certainty turn to dust? Stop losses are another tool of psychology, not just mechanics. It is easy to set a stop on paper, harder to honor it when the price approaches. Your mind whispers, move it just a little lower, give it more room, don't take the loss yet. That whisper is deadly. It tempts you to trade on hope instead of discipline. But the market doesn't care about your hope. The stop exists to protect you from yourself, from your hesitation, from your pride.